What's going on in the bond market? Hey, if you're new to this channel, my name is Kevin Retro. I'm the owner of First Meridian Mortgage. I've been in business for 29 years as a mortgage broker, 25 years as an insurance agent, owner of KSA Insurance Agency, and a licensed realtor for over 20 years. So here's the thing, the markets are turbulent right now, and no one knows exactly the direction that the Fed is going to go. Right now, we are at a 50-50 shot, essentially, at the Fed cutting interest rates in December on the 10th. We're at 54%. We're only at a 49% of an additional cut in January. And the market news right now with most of the Fed officials, Mohammed Al-Arian goes on to say on CNBC that there is a divergence between high inflation and the job market still being good and not a lot of layoffs to push the Fed to actually have to cut interest rates. So why does that have an impact, or what's the impact on it? If you look at the Treasury over a 1 month period, we were as low as 3.99, and today we're at about 414 to 416. And in the last 5 days, if you look at the turbulence behind that, we were as low as 406, we're back up to 414. And over a 1 month period or a 1 week period, we're essentially at the same level, 413, 414. But if you looked at today, we thought we were going to get some action from, 412. We dropped down to 407. The market looked good in the morning. And then in the afternoon, it all shifted back. And most of that is because of the talk from a lot of the Fed governors that the December rate cut might not happen. Other things in the news. Bill Pulte, the FHFA director, has removed at Fannie Mae the minimum credit score of 620. Now, that's effective as of the 15th, and that should help some people get into home ownership with a lower credit score. Now, that doesn't necessarily mean when you pull back the curtain, we know exactly what they're doing, right? You potentially might have to have good compensating factors, extra cash in the bank, a good credit history over the last 12 months or 24 months. Maybe the bad credit was just something, a medical or a collection or something of that nature, which looks like to be a 1 or a 2-time occurrence. That is causing that credit score to dip below the 620. But this will bring it more in line with FHA. Now, the thing about it is FHA still may end up being the leader with a lower credit score because the mortgage insurance is capped at the 0.5 level, whereas with a conventional loan, it may have more mortgage insurance. Where this may play out in someone's favor would be on an extremely low loan to value. Maybe someone's got a 580 credit score with a lot of equity, and then the conventional loan would make more sense. And FHA, the person goes backwards the 1 3/4 upfront mortgage insurance premium. So like on a $500,000 loan, a conventional loan with no mortgage insurance because it's got a lot of equity would be a lot better than taking an FHA that would have that mortgage insurance. So that's where that credit score dropping may help. In other news, mortgage delinquencies are up at their highest level in a number of years. The delinquencies are seasonally adjusted at over 4%. I don't know how much this could be a cause of the government shutdown. Normally it takes longer than 40 days to cause someone to be in that predicament of being foreclosed on. And most mortgage companies were lenient for people that were furloughed. In other things in the news, 50-year mortgages, good thing or bad thing? Here's my opinion, right? A wise realtor who's since passed, he was about 40 years older than me, said, Kevin, there is a mortgage for everyone. And what he was meaning by that is there is a situation where every mortgage product might help one individual. While I deem a 50-year mortgage essentially a situation where someone is applying some money toward equity, it's better than an interest-only loan, but should only be used as a step into homeownership. And the true benefit I feel behind that is price appreciation. If we can get someone into a mortgage and they're able to leverage their down payment to buy a house, not pay rent, and gain in appreciation of that valuable asset of which they're living in, the quality of life and generational wealth building can start from there. Now, should everyone take a 50-year mortgage? Absolutely not. A negative situation could be, I am a firm believer that in retirement, that people should not have a mortgage payment. Ideally, try to get that mortgage paid off before you go into retirement. Thing about it is, depending on when you get into home ownership, I did a video last week that the average first-time homeowner was 40 years old. If he took a 50-year mortgage, it's not paid off till he's 90. The key is, like I said, use it as a stepping stone. Start paying more as that equity builds. Hopefully, restructure that to a 30-year, maybe a 20, maybe a 15 at some point, and get that loan paid off before retirement. Now, contrary, being devil's advocate that I do very well sometimes, what if you had a situation that someone has $1 million home and they are older and they need to tap that equity to live on, right? 50-year mortgage, they're not ever going to pay it off. Their heirs can pay that mortgage off at some point once they pass, and potentially that 50-year mortgage could allow that person to pull out enough equity, to live out those remaining years. So used properly as a tool, there are a number of ways that I can say positive or negative. We don't know if it's going to happen. Early in my career at World Savings, I did give a few people 40-year mortgages. Here's the thing. At a low interest rate, if someone gave me a 50-year mortgage at 2 or 3%, if that was to ever happen, because we never know what the market's going to do, that product comes out, then rates go down. You just never know, right? I could easily make 2 or 3% over a 50-year period and make that argument work to my advantage. So I don't want to poo-poo it yet. The other thing that is out there being talked about is, so in closing, in 2 weeks we have Thanksgiving, and a lot of people are budget shopping this year. So Walmart is offering a $40 Thanksgiving meal for up to 10 people. Butterball turkeys are 97 cents a pound, but the average person's going to spend between $175 and $952 on Thanksgiving. So one thing I want to say is, so in closing, what I want to say is, 1, have a happy Thanksgiving. 2, I'll tell you a quick story, and that is I had a client on Wednesday that I could have gotten a 5.99% 30-year mortgage at no cost. She's at 6 3/4 right now. She could have saved 3/4%, but she waited. Here's the thing. With a market like this, on a 5-day trend, you have to take those opportunities when they come. So if you can get a no-cost refi anytime, especially if it's saving you 3/8 or more, lock it in, take it, refinance again 6 months later if interest rates fall. That simple miss could have paid for the entire Thanksgiving meal. Think about it. My name's Kevin Retcher. I'm the owner of First Meridian Mortgage. Happy Thanksgiving. If you have any mortgage, insurance, or real estate needs, give me a call. I'm happy to help.